Kia ora, and welcome to the Cotality Property Market Update for Hongongoi, July 2025. The property market in Aotearoa is struggling to gain momentum, with values fluctuating between growth and decline. In June, values grew by 0.2%, following consecutive falls of 0.1% in April and May. Since the start of the year, values have increased by a total of 0.6%. However, sales transactions tell a different story. Almost 46,000 residential properties have changed hands in the first 6 months of the year, an 18% increase compared to the same period last year. This continues the growing trend since 2022, when transactions troughed at less than 67,000 for the entire year. Our sales projection model forecasts that 2025 will finish with over 96,000 transactions, reflecting a more normal market compared with the past couple of years, where sales activity has held well below average. Despite strong activity, prices have not seen significant growth, even with falling interest rates. High listing levels mean abundant choice, and while affordability has improved, it remains stretched. The recent improvement in affordability has only reversed the extreme levels seen during the COVID-induced boom period, bringing us back to 2021 levels, which many would argue were not exactly affordable. The boom phase and high property values have set high expectations, leading vendors to expect higher prices than may be fair. This is reflected in the relatively high number of days it takes to make a sale, with significant negotiation happening between vendors and buyers. Increased activity is evident across each of the main centres, with Kirikiriroa Hamilton, Ōtautahi Christchurch and Tauranga seeing more than 15% year-on-year growth in transactions. However, value changes are inconsistent, ranging from flat in Tamaki Makaurau Auckland and Te Whanganui Atara Wellington, to 0.6% growth in Tauranga and Ōtautahi Christchurch. Over the 3-month period from April to June, values decreased by 1.0% in Te Whanganui Atara Wellington and 0.4% in Tamaki Makaurau Auckland, but increased by 0.8% in Ōtautahi Christchurch. Expectations for the rest of the year have been adjusted, with the widely accepted path of 5% growth in 2025 now closer to 2%. If the economy picks up, confidence could flow through to the property market, but time is running out for significant changes. On the economic front, the Reserve Bank is closely monitoring the situation, but is not panicking. The effects of previous monetary policy loosening, which took the official cash rate from 5.5% to today's 3.25%, are yet to fully take effect. Inflation remains a concern, with the USA confirming intended tariffs for many countries, and ongoing global conflicts threatening the free flow of goods. For those borrowers recently taking on new lending, Reserve Bank data on terms chosen shows that people are tending to hedge their bets. In May, 34% of new lending went on the floating rate, 40% for 6 to 12 months, and 27% for 18 months or longer, and the shares have been consistent for the last couple of months. What's also quite striking when you overlay the Reserve Bank monetary policy dates is the clear awareness of those monetary policy dates for borrowers, with clear spikes of borrowers floating as they await guidance from those statements, then a shift to fixing afterwards. The Reserve Bank decided to hold the OCR for the first time since July 2024 in May, while concurrently paving the way for a potential cut at the end of August, pending more official data, including CPI inflation data on 21 July. Mortgage holders and potential buyers are hoping for a low inflation read, with first-home buyers continuing their strong activity. They are joined by mortgage multiple property owners looking for value in the market, though low net migration and flat rents are likely tempering investor appetites and containing their activity growth. Meanwhile, movers remain cautious due to the weak labour market and abundant supply. The market typically cools through winter, so reduced activity is expected for the next couple of months. However, the approach to spring could be crucial for the next phase of the market. Stay informed of all the latest developments by regularly visiting the newsroom at cotality.com/NZ, following us on the Cotality NZ social channels, and subscribing to New Zealand Property Market Podcast on all good podcast platforms. Mā te wā.